It's Andrew Holland. He's the CEO at Avendus Capital Alternate Strategies. He's joining us on the show this morning. Andrew, thanks very much for taking out the time. Great to speak to you. What is the sense that you're getting right now with regards to, the dynamics for the Indian equity markets and where we are perched at significantly, because it is the record high?
I think we're kind of set quite well, actually. I think a number of reasons. The global worries that we're seeing will really mean that India is a safe haven market, and that's probably why we're one of the best performing markets this year, actually. That bodes well. Although I do have concerns about the global factors. And of course, with Prime Minister Modi winning this kind of mandate, I'm sure he wants to build a legacy now going forward. So, expect more, more from the RBI, expect more from the Finance Minister, and all of these things I think will play out in the next few weeks. Obviously, this week we'll have the RBI, and hopefully we'll see at least I think they should do 50 basis points. It's baked in at 25, but 50 is what they should be doing. And obviously we're going to wait to see what the new finance minister has to say about kickstarting the economy. But that's really where the focus is going to be. Is after those kind of shockingly poor GDP figures last week. Is how we're going to get this growth revival coming, and if all the right noises are made by both the RBI, the Finance Minister, and in the 100-day plan, then I think India could continue to get huge amounts of inflows from foreign investors.
And with the rupee being where it is, that's definitely more supportive for foreign investors to come and put some more money into India. But you were talking about what the finance minister does in the 100-day plan, but from a market standpoint, is it going to be that incrementally positive with regards to the immediate priority that the government has to fix things in the system?
You see, it's all about the direction. If you build confidence in terms of what the policies will be and how the economy is going to shape up, then for a lot of corporates, they're going to have to start thinking about their capex plans, because a lot of industries are running at high utilization rates in terms of capacity. So the second half of the year could see that kind of private capex cycle pick up, which we haven't seen for many years now, and that will be the extra boost that the economy needs on back of domestic consumption and government spending, and that's coming too. So, I expect GDP growth to anyway pick up from the lows of the last quarter, but if you can get that extra push going, then I think it gives confidence all the way around. Both for investors, but also more importantly for corporates to start spending some money on capex.
Andrew, good morning. Neeraj here, and thanks for joining in. I remember our conversations ahead of the big event, which is the elections, and you guys are sitting on reasonable amount of cash, if I'm not wrong. What is it that you're doing now? Are you fully invested? And part two of my question, do you reckon that the kind of flows that are coming in all through the last few days are passive ETF flows, and will they continue coming at the current valuations that we are at?
So there's two parts to that. One is, we did deploy after the exit poll, so we have invested more, and obviously that has paid out very well for us. In terms of flows, this is what we've been saying for some time now. I mean, we've said that we do feel that the US is heading towards recession, and all the kind of indicators are telling us that. It's only now that the kind of major brokers in the US are starting to talk about it. And really, what you're seeing is a slowdown, but the slowdown was happening before these kind of new tariffs that Trump has imposed on everybody. So that's only going to exaggerate it, and that's why you're seeing bond yields down. So if you take that scenario, then obviously other emerging markets are going to suffer in this, and India becomes a safe haven. So I do believe that foreign investors will seek India as a place of domestic growth, but also as a safer haven in terms of markets. And that's exactly what you saw in actually 2018. India was one of the best performing markets because of its safe haven kind of stature in terms of being a domestic-driven economy, not an exporter.
Okay. Andrew, then part 2 of my question would be, at these 12,000 levels, and the valuations, forget the levels, but the valuations that we are at, would you be comfortable putting more money to work? Because you may have a view that if India is the oasis of growth in a world which is starved of growth and affected by the trade war, maybe more money would come into India irrespective of the valuations, the current valuations that we are trading at.
Yeah, you see, it's a very kind of simple story, right? In terms of, if you fast forward and let's say we're at the end of Modi's term in 5 years' time, what will be the size of the economy? It's going to be towards $5 trillion. And now, if that's the case, you're going to have a financial, system and banking system which is, much larger than it is today. And obviously you can pick the winners from the private banks, which you figure will, be part of that growth story. The same for, domestic consumption. It's not going away from us. And if anything, the large cap companies are going to continue to eat market share away from the smaller players. So this is, these are trends which aren't going away from you. You might have blips in terms of valuations, but when these companies will deliver growth, 20 to 30%, year in, year out, then these are kind of companies you want to be holding for the longer term. And I think India will deserve its premium. I always had a premium, actually. It's just at the high end at the moment, and that's only because the possibilities of a growth slowdown for developed markets, which we've been talking about for some time, is going to happen, and that will affect other exporting markets, exporting countries like China, Korea, Brazil, and so forth. And obviously, if there is a slowdown, then commodity prices will fall, and that will be an extra tailwind for India, but obviously a headwind for other emerging markets.
Okay. Andrew, market levels are one thing. I mean, you go on debating about whether this is right or wrong. What would you, a large money manager, be doing in the current scenario then? Are you looking at investing in pockets which have been impacted with growth and might come back? I mean, autos is a classic case in point, right? The opinion is divided. R.C. Bhargava yesterday mentioned that he believes that there will be a pickup from August itself. So how are you playing sectors within? Are you buying the expensive, consistent ones, or are you looking at some of the beaten down ones?
Well, let's think about the beaten down ones. So autos, I'm sorry, I'm not buying into this quick recovery story. It's just not happening. There's going to be a lot more competition within each of the segments, and what that leads to is obviously either more discounting or advertising costs rising. So the margin squeeze is there, whichever way I look at it. And you're not going back to double-digit growth. You might get one recovery month, but that's about it. It's those levels of high growth are just not coming back for some time. So I think it's a bit of a false dawn for autos, and I think they remain more of a structural sell at this point. I'm still not convinced the bottom's there yet. I don't think analysts have cut the forecast enough. The other down, the sector which has been beaten down is pharma, and again, all the problems that that keeps emanating from this sector, whether it's FDA or being sued in the US, just keep coming, and there's no respite. So again, it's a sector which you can just you don't need to kind of try and bottom fish yet, because it's probably not there. So why look at the beaten down sectors? The only beaten down sector I'd probably look at is telecoms, because I do believe that we're probably towards the end now of the pricing war, and you could see either stability or rising prices going forward, and I think that's great for the the two players which have suffered the most because of Reliance's aggressive market share grab. But I think that's probably coming to an end now, and I'm sure Reliance will want to stop burning so much cash and start generating some profits going forward. So I think that's one beaten down sector which I feel could see some improvements over the next few quarters.
Okay. Andrew, what is your expectation with regards to the RBI policy? Obviously, the consensus is baked in a 25 basis point rate cut, but probably doesn't end there. For the rest of the year, some are even baking in another 50 basis points cut. So for the RBI rate of about 5.25 till the end of the year is something that they're anticipating. But what would you, bake in with regards to your idea what the RBI could do? And is that good enough to make sure that the system starts functioning normally?
Well, I think that they can actually do 50 basis points this time around. And all we need is the right noises around, keeping liquidity, in supply, to help us through this kind of NBFC problem, so it doesn't escalate into real estate any much further than it already has done. So that would be what I'd be expecting near term. If I look forward, then if I'm correct that the US is heading towards recession, then interest rates are going to tumble down there by 50 to 75 basis points. So there's another 50 basis points I think the RBI can do if that scenario plays out. So 100 basis points for the year would be what I'd be looking at.
Mm-hmm. Okay. What happens now with regards to, there's talks of more liquidity being pumped into the system by the RBI. They have been doing that on a timely basis with various, OMOs, currency swaps, trying to make sure at a systemic level there's no issue with liquidity. But is that enough according to you? And do you think that the issues that the NBFCs are facing right now, they're a little tight on lending, they're a little circumspect on lending to the industries that need it the most right now? How does that balance out, and how does that then equate to the fact that when you're trying to push growth on one side, the main system that lends to that growth is not working in full force?
You see, I think the problem in the NBFC sector is that the large ones are doing very well, thank you. I mean, you can see those in the results. It's the ones below which, a lot of companies, just jumped into the sector with no real experience of doing this before. And I think, if we clear out this mess and those go by the wayside, I think that's fine. I think the big thing that the government can do, or the finance minister can do, is to do something with the PSU banks, because they're all floundering. They've all spent all of the recapitalization or the money that they got, and they're now back to square one. Now you've got a few things to do. You can try and merge them and hope for the best. I mean, the Bank of Baroda experience is not so bad, so that's encouraging. But why not merge and privatize and just and get some good management, who are not going to change every 3 years. You have a roadmap. I think having a PSU banking system which is actually operating will take a lot of stress away from relying on non-bank financial companies. And I think if the finance minister can achieve that, then there's a big re-rating for the PSU sector, but also you get a sizable banking system which is starting to work for you.
Interesting. Andrew, just one final question. So let's work with an assumption that the pace of banking consolidation / reforms happens at the pace that it happens. We don't quite know as to when will that happen, if it will happen in the first place. What do you do now? Because the good ones, and you mentioned yourself, the well-performing NBFCs or the well-performing banks currently seem to be priced to perfection. We're seeing some green shoots in the results of some of the mid-sized banks, some of the small finance banks, but those two have inched up. How does one deploy money, or how does one invest in this space right now to earn returns over the course of the next couple of years?
Well, I think even with the private banks and the well-managed large NBFCs, those ratings aren't going to go away, because they're now going to keep taking market share from everybody else. So, and the economy is growing, so it's good news for them. So I think that the real interest to me is what happens with PSU banks, and for the first time, there's an opportunity, I think, rather than just recapitalize them and then they just that money just goes to waste, is really having a rethink about what the government should do. Should they really have control? And I think that's there's a case for them not doing that, merging and getting some some management in there, which can, the whole banking sector needs this. If you're going to be a $5 trillion economy, you can't just rely on the private banking sector for this. You've got to have the PSU banks running at full speed. And at the moment, they're all too small. They have no balance sheet. and they really have wealth management which changes every 3 years. So that doesn't work for anybody, and that's why it's, you've seen erosion of both share prices and obviously the problems that they have in terms of non-performing loans. Change that, and then you've got a huge sector upgrade, and that was what would lead, I think, the market going forward, and that would just give both large and small and medium-sized businesses banks which they can borrow from.
Yeah, so conditional call, if you will, on banks from Andrew Holland. Andrew, so good having you. Thanks much for taking the time out. Lovely speaking to you today.
Pleasure.